Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, September 21st, 2010. Well, folks, it is Fed Day. We're expecting the decision any second here. Again, market is upticking just a little bit off the lows of the day pre-Fed. Market's essentially flat with the Dow, S&P, and NASDAQ just slightly negative on the day after a monstrous rally yesterday. Now, again, we're waiting on this Fed. Fed leaves key interest rates unchanged as it comes out live here at 0 to a quarter of a percentage point. Again, market is reacting slowly to the downside. We're not having a big rush, but we are seeing a little bit of selling. The key is what they're going to say here and how the reaction is. So again, we are seeing the Fed release their interest rate decision. It looks like they're keeping things the same. FOMC prepares to provide additional accommodations if needed. So again, Fed is saying they're going to provide additional things if the market needs. Generally, that's a positive, but again, we've heard that time and time again from the market or from the FOMC, the Federal Reserve. All right, the vote was 8-1 with the Kansas City Fed Chief President Honig dissenting. All right, so you had just a pretty much unanimous decision there, just one Fed chief not with the plan here. And again, markets are basically reacting with a little bit of a negative, and I just said before it was a little bit of a positive that again they were willing to supply whatever measures were needed, and you're seeing the market now uptick. And again, overall you had a little bit of an uptick, then a downtick, and now the markets are back to where they previously were prior to that decision. Again, this is where it all comes in. Markets beginning to sell again. I want to cover what's happening today. We did get some economic news out this morning. Housing starts were better than expected. Again, it looks like some of the housing players may be starting to build again. Whether or not that's a good news portion is up in the air, as obviously if the more they build, the more inventory is out there on the market, so the harder it will be for prices to increase. But maybe the housing players are building again because they see a switch in the economy. Obviously, the news has supplied a huge rally to this market, and again, if you look at your 60-minute chart, we'll flip to your 60-minute. If I zoom out, you can see the type of rally we've had. From down here about 3 weeks ago, right at the end of August, we were at 104.50 on the SPY. As of yesterday's high, we went to 114.50, a $10 move, essentially a 10% move in the markets in 3 weeks. That is a massive move. And again, the key is to understand where the next move is going to be, what's going to happen. Spiders, again, we'll flip back to the intraday, are now upticking again just a little bit. So far, no major reaction. The question, again, will be over the next couple days, where does this market go? Now, a couple things to touch on. Obviously, the spiders initially opening slightly lower, going down in spirit of bear flag. Notice the bear flag pattern here. And again, I'll give you guys a little more analysis just to show you exactly what played out today. Notice the downward move off the gap down and sideways move. That's an in spirit of bear flag. It did play out to the 50 moving average. 50 moving average was a no-brainer buy for a little scalp to the upside. It rose, then we went sideways to lower into the Fed, and now we are popping just a little bit. But again, I repeat, folks, this pop is not anything major. The markets are still negative on the day. Just to go over what the indexes are doing right now, you have the Dow down. Make that the Dow up 5 points now. The S&P is down 2.5 points, and the NASDAQ is down 4. So S&P and NASDAQ are lower on the day, while the Dow is slightly higher. We are getting a bigger pop now. Spiders are just down 5 cents. Market is getting a little bit of a maneuver here. Again, as I mentioned, the FOMC willing to supply whatever is needed to keep this recovery underway. That's being taken as bullish. Let's take a look at the dollar. The dollar is a key play here. Look at the drop on the dollar. You guys out there that follow us, you know the inverse relationship with the dollar. The dollar's collapsing here. That is, again, creating a move up in the markets. It's that simple, folks. The Federal Reserve wants to weaken the dollar. So does the government, because not only will it make our exports cheaper to other countries, but it also helps the markets rally. So again, the dollar drops here, gets pounded here to the downside. That creates a little bit of a move up in the markets. And again, the markets, again, are just on the flat line. It's not like they're getting a huge move. We're not even back to the highs of the day. But again, the dollar drop is perpetuating that rise. Now, again, folks, you have to understand the reasoning between the dollar and the markets, what I just explained. And again, understand the relationship there, or inverse relationship between those two factors. Now, let's go to the oil. How's oil doing? Oil is getting a little bit of a pop, still lower on the day on the USO, down 14 cents. Now, again, it makes sense. If the dollar's dropping, a commodity must increase in value. All right, that's oil. Also, if things are looking better, then oil will go up as well, which also means, think about it like this. If the Federal Reserve, if the market looks okay right now, I mean, economic news has been good. People are very bullish out there, and the Fed basically says, hey, listen, we're going to do whatever we have to do anyways. So that puts another little base underneath the markets right now, which is very positive for oil and other commodities. Let's take a look at gold. Gold sometimes goes in the inverse, although with the dollar falling, we'll have to look. No, gold's getting a nice pop here, beautiful little pop. So again, the dollar collapsing and people are rushing into gold. Now, why would they be rushing into gold? Let's talk about that for a second. The idea here is that gold is a place where you can hide when everyone else is printing money. We know the Fed has just said they're going to do whatever it takes, meaning print, to keep this recovery going, or if the market starts to sputter, they'll come in and save it. What does that mean? Well, if they're going to print lots of money, where's the safety net? Where's going to be the safe haven? And that's going to be in gold. So understand these factors, folks. These are very, very important. Let's take a look at the spiders again. We'll go back to that. Nice pop here. Spiders have turned to the positive side. We just went up into a little bit of a double top resistance point. You guys know if you're a scalper out there, that's your scalping opportunity. This area right up here. Notice how it was the high from yesterday. Now you are getting a good pullback. So just like that, there's a scalp. See the scalp? And this is what scalp trading is all about, folks. Playing the levels on the charts that we have on there. And again, as you guys see, that level was there before we even went to this level. And sure enough, look at the pullback at that level. It's a beautiful level to scalp and an easy profit for those of you that took that, and many in the chat room did. All right, now a couple other things to go over. First of all, we had another huge winner out of the Research Center today. Zoom, Z-O-O-M. I highlighted this in the Research Center Pro Trader watch list given out. I also discussed it multiple nights in a row over the last 3, 4, 5 nights in the video as a possible runner, and I thought it was going to be a good one, and sure enough, it was. Here you have Zoom. It was trading at the low end of the charts with tons of shorts. I noted this last week on last Thursday as a bullish play, and sure enough, last Thursday at $3.50, it was highlighted. Today it hit $5, folks, $4.98. Basically a huge master move up. You're talking, 30-40% move on this stock in a matter of a few trading days. I have released other ones out there. People know about those that I'm currently in on the small cap Chinese side. I continue to be bullish on the Chinese sector based on the small cap levels on some of these stocks. Recognize them, be ready to rock, guys. The profits are there to be taken. Just an average small trader in the Research Center buys 1,000 shares of this at $3.50 and sells it, let's just say $4.50. That's $1,000. You're talking about over a year, basically a year and a half or so of the Research Center paid for, bam, 1,000 shares of a $3.50 stock. It is that easy, folks. Bottom line, join the Research Center. All right, now let's go over a couple other things as those winners continue to roll. Let's take a look at Goldman Sachs. Goldman Sachs has had an okay day all day. You can see there's just a lot of resistance here. It hit it right here, pulled back over the last few days, and hit it again right at this point today, up $1.50 on Goldman. JP Morgan is weak, although it is off the lows, down 13 cents. So financials, aside from Goldman Sachs, are weak today. What other plays are we looking at here? Let's take a look at Exxon Mobil. XOM has turned to the positive side. Let's go to the intraday chart. And you can clearly see a nice pop just with the market. Just like the market popped, so did Exxon, turning to the positive side. Chevron, however, hasn't been able to turn to the positive side. Really down about 6 cents here, although it did get a nice pop on that Federal Reserve meeting announcement. All right, and again, the big thing from the Fed is that they're really keeping everything the same, but they're willing to do whatever it takes, essentially. That's what I'm hearing, the verbiage. Now, we've heard that before, but obviously the market's in this jovial, bullish mode right now where that's going to be a positive. Now, the question is, how long does this last? And that's the other reason why you need to be joining the Research Center, folks. There's a key time frame coming up that you want to be aware of. If you're not aware of, then be ready to get hurt by it, all right? Bottom line, join the Research Center, all right? Now, let's talk about a couple other things. We want to talk just about Apple Computer. Apple up $1.44 today. Apple continues its nice momentum. Apple, again, up over 20% in the last 3 weeks. That's a huge move for a market cap the size of Apple. And we'll also take a look at stocks like Amazon. Amazon having a good day, up $1.22, although it is coming back in. And let's pop back to the spiders before we end this video. And again, notice the scalping level right up there. Look at yesterday's high, look at today's high, look at where that market went to, and look at the pullback. It's a ginormous pullback for a scalper now. And again, plenty of profits to be had as the market comes back in, right back to the flat line. If you ask me, I think this market ends around the flat line today, give or take maybe 25 points on the Dow to the positive or negative side. And again, we'll see again how it reacts in the coming days. But again, join that Research Center. There's key time frames, there's key plays, there's key swing trades, educational advice, and again, proprietary analysis that is released in that Research Center. Talk to you soon, folks. Let's make some more money this afternoon. Take care.